Traders, Manny Cabrera from NBC Trading Academy with today's pre-market forecast for Friday, June 28th. Unbelievable last day of the month of June. Let's quickly look at our news items from Forex Factory. Today's Friday. We have two news items coming up at 8:30: personal spending and Chicago PMI and personal spending and core PCE. Chicago PMI, very tricky pieces of news items to trade around. And at 10 a.m., we have the revised UOM and continuing coverage from the G20. So, very interesting day. Tough morning, particularly with low volume, and the Chicago PMI sitting right smack in the middle of the action. So, keep your eyes open for that one. Let's go to our analysis chart, jumping with our daily chart. Market comes off all-time highs. It's finding support here at this level at about 28, 29.18. Two updates with very low volume. Our volume has dropped right up tremendously. Remember, we're looking for minimum 1.1 million and an HRR 14. ATR range has been steady at over 14, at this point 26. But our volume has dropped dramatically. We're at 979. That's our average volume for the last 14 days, if I'm not mistaken. So the volume is drying up. That's why you see such very little activity, and it's a little bit trying on your patience, but this is a typical summer pattern. You add to it the fact that we're moving higher towards all-time highs again. We've been there before. You see how we're going up, the bars get smaller, the ranges gets tighter, the volume dries up. It's just what we have to learn to deal with, and that's why there is no substitute to practicing in the market, being able to see charts and analyze and trade and continue to practice in every type of environment so you can get used to the type of changes the market can make, and more importantly, how to adapt. So, what do we expect? Expecting a bit more continuation this morning. I'll show you why in a minute. We're going here to our projection chart. Our chart here is a chart where we're projecting areas where the market is going to be moving to and from, and if you can see, we continue to hit our areas. This is the most fun part about analysis, is when you're able to pin these points areas out and you can project them out into the future, and you can see the market react to these areas, and it gives you a lot of confidence in your trading when you can anticipate market movement. It's just a really terrific place to be when you can do that. Right now we find ourselves in real tight consolidation between these two areas here, between the areas of 29.37, as I mentioned before, 29.40 and 29.18 area. That's our range, and if you notice, we came down off the all-time highs. We established the bottom, and we've been pretty much oscillating here. Right now, what do we have? We have an ascending triangle. We have this trend line here to the upside. Here's where all of our buyers are sitting. Up here's where all of our sellers. Most of the time, we expect markets to break these areas and move higher, and I can show you that more clearly in our analysis chart here. And you can see it here. Here's the range. Here's the range once again. There's the market breaking through. There's your support. There's your support that we were discussing right here. Here's your resistance. Typically, these ascending triangles break to the upside over 70% of the time. So if the market decides to move lower, these are the areas. The first area it's going to test is yesterday's intraday high, potentially this trend line here before it moves higher. And if it breaks higher, then we can expect a little bit of a run to the upside. Again, it's all based on volume. When I'm talking about a run, I'm not particularly designating the speed or how efficiently it's going to run. I'm saying if it breaks, it's going to pick up. It's going to start with a particular direction. It's going to have a bias to the upside, and you just have to be patient on the development. That can happen early. It can happen after news. It can happen after lunch. But that's our expectation. Obviously, if market breaks lower, we have areas where we can expect the market to move lower too, and we have our trade plan set up so we can adapt to either movement in the market. That's the key. And here it is once again. You see we have a shorter term trend line here, but the story is the same. The story is the same. We have the market potentially moving higher. Here's our north-south line. As long as we remain above that line, we're expecting moving to the upside. So just keep your eyes open for these tests to these key support areas. Watch the reactions. Nice pop off these areas is a good sign of continued strength to the upside. Anything that can come down to here potentially and bounce strongly off here. You have a nice run here and potentially continuation up higher. That's our first projection. Other than that, we're looking to move lower. So keep your eyes open for those news items. Have a great trading session. Let us know if you have any questions. Ciao.